Welcome to the deep dive. So, you've handed us this interesting set of sources on the Zebec Network, ZBCN, and it really presents quite a fascinating dichotomy.
It does.
Their big pitch, their elevator statement, it's pretty grand, isn't it? Transforming global finance using these real-time programmable money streams for everything, like payroll, tuition, B2B payments, essentially trying to build this solid bridge between, traditional Web 2 finance and Web 3 efficiency.
And it's not just talk, right? This is a pretty massive utility project running mainly on Solana. And the numbers you pulled out, they really highlight the scale.
What were they again?
Well, ZBCN is apparently supporting something like $500 million in annual payroll volume already.
Wow, $500 million.
Yeah. And they've got over 250 enterprise clients, plus tracking more than 50,000 monthly users.
Okay.
And the reach, integration across, 18 plus chains and connecting to over 150 different tokens. It looks like an infrastructure player that's actually got real world traction.
That real world success, that traction you mentioned, it really sets the stage for our deep dive today. So our mission for you, the learner, is to really unpack this tension within Zebec.
Right.
Because on one side, you see this polished, compliance-obsessed entity trying to get that institutional nod. But then flip side, the crypto community is raising some pretty serious flags about its core decentralized security, like the very foundation.
Yeah, the code itself.
Exactly. So we're going to investigate how those two things can possibly exist together.
Okay, so to get into that conflict, maybe we start with the institutional face. The products and that whole compliance push.
Makes sense.
Their core offering is real-time payments. It's this continuous payment technology.
Right, instead of waiting for payday.
Exactly. Traditional finance, it's all batch processing, right? You wait 2 weeks, maybe a month for your salary. Zebec says, no, we stream it by the second.
So for the employee, that's like instant access to earned wages.
Instant liquidity, yeah. But the real hook for businesses, for the enterprise clients, is the control it gives the employer.
Control. How so?
They can instantly pause a payment stream or resume it, cancel it entirely, adjust the rate, all in real time. That kind of granular, immediate control over outgoing funds. Your typical accounting software just can't do that.
And this is where you see them moving beyond just being a software platform, right? They're pushing into the physical world. Tangible stuff.
Definitely. Not just digital.
We're talking Zebec cards, like the Carbon Card, launched March 2025, partnered with MasterCard.
Yep, saw that. 0 fees, which is attractive.
And a pretty hefty $10,000 daily limit, initially targeting UK and Europe, it seems.
But even more ambitious, maybe, is the hardware play they're making, the upcoming DePIN point-of-sale terminal.
DePIN, that's the decentralized physical infrastructure network thing.
Exactly. A DePIN-based terminal. The idea is to let retailers accept real-time USDC payments right at the checkout.
That's a huge step towards mainstream crypto payments if they can pull it off.
It really is. And the plan, apparently, is to bundle all this, the cards, the POS system, the payroll streaming, into some kind of super app down the line.
Okay, but to get that deep into regular commerce, into Web 2 systems, you absolutely need institutional trust. And the sources show Zebec is, almost obsessed with getting it.
Oh, completely. That pursuit of compliance, it seems relentless. Like September 2025, they got SOC 2 compliance.
Right, SOC 2. For listeners maybe not deep in enterprise tech, explain why that matters.
Sure. SOC 2 is this really rigorous third-party standard, super important for any SaaS company, especially in finance. It audits 5 key areas. Let me see. Infrastructure, product security, how the organization is set up, internal processes, and crucially, data handling.
So it basically tells big companies, okay, Zebec systems are auditable, they're secure, you can trust them with your data and processes.
That's the signal, yeah. And they're going global with it too. They're actively working on MiCA white paper approval.
Which is key for Europe, the EU's big crypto framework.
Exactly. And also aiming for full ISO certification by the end of 2025. Plus, look at their partners. Partnering with Circle's Alliance program, making USDC the default stablecoin.
Signals alignment with the, let's say, more regulated end of the stablecoin market.
Precisely. It all paints a picture of trying to meet the highest enterprise finance standards.
Okay. That's a really impressive list of compliance wins for any company, let alone a Web3 protocol. But this is where I have to push back a bit.
Go for it.
If they look like an institution, sound like one, act like one, SOC 2, ISO goals, MasterCard, Circle, how can they possibly justify or allow a core security vulnerability that kind of cuts against the whole decentralized promise? Doesn't chasing all these Web 2 badges seem a bit pointless, maybe? The actual Web3 foundation is shaky.
That is the central tension, isn't it? And it leads us right into their token, ZBCN, and the structure around it. You could argue Zebec is trying to sell two different things to two different groups.
Compliance to the suits and decentralization to the crypto natives.
Something like that. Compliance and flexibility versus immutability.
Okay, let's look at the token itself first. There was that shift, right? From ZBC to ZBCN.
Yeah, March 2024. It wasn't just renaming. They did a 1.10 split.
Why? What was the rationale?
The stated goal was efficiency, specifically getting a consistent, simple gas fee structure pegged at 1 ZBCN per transaction. Makes those high-frequency payroll streams more viable economically.
Okay. Makes sense for the core product and its role, its governance and utility.
Correct. Dual role. And the governance model itself is interesting. It's hybrid.
Hybrid
meaning it uses formal on-chain voting for the final says on proposals.
Yeah.
But crucially, that's combined with mandatory off-chain consultation.
So discussions happen first, maybe on forums or Discord, before a formal vote.
Exactly. Proposals get vetted, debated, maybe tweaked based on community feedback before they hit the blockchain for the binding vote.
What are the potential issues with that? On-chain is the pure crypto ideal, right? Off-chain consultation could be less transparent, maybe controlled by insiders.
That's the risk, yeah. They try to formalize it with Zebec improvement proposals, ZIPs. The voting window is pretty standard, 3 to 5 days. But the key number is the quorum.
How much needs to vote?
33% of the circulating supply. Which, honestly, for a project that likely has significant institutional or foundation holdings, 33% is not a particularly high bar.
Meaning a smaller group could potentially steer the ship without needing widespread agreement.
It potentially allows a concentrated group, maybe early backers, the foundation itself, to have a very strong influence, maybe even effective control. It's a common setup for projects that prioritize moving fast, but yeah, it does raise questions about true decentralization.
So the governance seems built for speed, maybe aligning with that institutional agility need we talked about. What about utility for the average token holder? What are the incentives?
Beyond voting, ZBCN has quite strong utility designed to encourage people to buy and hold it. It's the gas token, right? Needed for transactions, for bridging fees across their ecosystem.
And that usage fuels a burn mechanism.
Yes, it supports deflation. When ZBCN is spent on fees, part goes to validators, and another part is automatically burned, permanently removed from supply. Theoretically increases scarcity over time.
Okay, standard deflationary model. What else?
For holders, there are perks. Holding ZBCN can grant you VIT status. That means access to premium products, like their Zebec Instant Card, often with 0 fees or higher limits.
Like a loyalty program.
Sort of. Plus, they offer rewards up to 5% ZBCN back on spending through certain programs. So the utility model seems pretty well thought out, if you assume the underlying security is solid.
Which brings us right back to the core problem. We have to talk about this open letter that came out from an investor, someone in the community, really laying out these risks around decentralization.
This is where that institutional polish starts to look a little thin.
Yeah. So concern number one, the big technical one, the active update authority.
Right. This is probably the most fundamental issue flagged in your sources. The SPL smart contract for ZBCN, the Solana program library contract, it still shows the update authority key as active.
Okay, translate that. What does update authority active actually let someone do?
So let's be clear what the sources say it can't do. It apparently cannot mint new ZBCN tokens, which is obviously very important.
Good. So no infinite inflation risk from that key.
Correct. However, what it can do is change the token's metadata.
Metadata, like
the token's name as it appears in wallets, its ticker symbol, ZBCN. Maybe the associated logo URL.
Okay, that sounds cosmetic. Why is that such a big deal in crypto? Isn't that minor?
It sounds minor, but think about the core promise of crypto. Immutability, trustless code.
Right.
If the team running the project can unilaterally decide tomorrow to change the token symbol from ZBCN to, I don't know, Zebec or something else entirely, that completely breaks the concept of an immutable on-chain asset.
How could that be exploited? Or why is it bad?
Well, it creates massive potential for confusion. Imagine waking up and your ZBCN tokens suddenly have a different name or logo in your wallet. It damages trust. Theoretically, if the team's security was ever breached, someone could use that key to change the metadata, to point to phishing sites or create widespread FUD.
And for a project chasing SOC 2 compliance, which is all about security and controls.
Exactly. Having an active update key is like leaving the master key to the branding under the doormat. It's a major internal control red flag. It fundamentally undermines that trustless promise that Web3 is built on.
So the community is asking for pretty basic things here. When are you revoking this authority? Give us a date, and then get an independent audit to confirm it's been done and the contract is locked permanently.
Simple, reasonable demands from a decentralization perspective.
And there's even this theory floating around, right, that maybe they're waiting to revoke it, perhaps until that big super app is fully rolled out.
It speaks to that tension again. Agility versus immutability.
They want the flexibility to fix things or rebrand quickly during a major launch.
That could be the rationale. Having that key gives you flexibility if there's a mistake or a strategic change needed during the complex rollout phase. But like you said, every single day that key remains active, it represents a fundamental existential risk that institutional partners and crypto users have to factor in.
Okay, so that's the update authority. Concern number 2 mentioned the sources, shifts to transparency, specifically around partnerships, the White Rock example.
Yes, the White Rock situation. That definitely caused a stir.
Why?
Zebec announced a partnership with this group, White Rock. But according to the sources, people immediately started asking questions because the White Rock website, their team, their online presence, it was all very vague. Hard to verify who they actually were.
Not ideal for a company promoting trust and transparency.
Not at all. And they got worse. A co-founder from a different company, WLFI, publicly came out and contradicted Zebec's announcement.
Contradicted how?
Stated flatly that WLFI does not support or work with White Rock.
Wow.
Which directly undermined the credibility of Zebec's claimed partnership.
Okay, so if Zebec is out there getting SOC2, aiming for ISO, badges that scream, we do our due diligence, we have rigorous processes, what does announcing a partnership with a seemingly unvetted or maybe even non-existent entity do to their reputation?
It creates a huge perception gap, a massive risk. Institutions vetting Zebec expect them to have thoroughly checked out their partners. It's part of those SOC2 organizational safeguards.
Right. Your supply chain, your partners reflect on you.
Absolutely. Announcing something like the White Rock partnership suggests, at best, sloppy internal controls over marketing or business development. At worst, it makes potential enterprise clients pause and really question if Zebec's operational maturity actually matches their compliance certificates. Is the house built on solid ground?
That tension really is the core takeaway here, isn't it? Zebec Network, on paper and in practice in some ways, shows undeniable progress. Real-world use, big compliance milestones, a thought-out token utility.
The transaction volume, the client list, it's significant.
It is. But all of that success, all those achievements, seem constantly overshadowed, viewed through this lens of skepticism, because of these really fundamental issues. A core security vulnerability with that update key, and transparency questions around things like the White Rock partnership.
And this highlights a really profound challenge that you, the learner, need to grasp about this whole Web3 infrastructure space. It's this constant, maybe unavoidable trade-off.
Trade-off between what?
Between achieving the scale, the compliance, the flexibility needed to integrate with Web 2 and attract institutions, versus upholding the core, often non-negotiable Web 3 promise of decentralization and immutable code.
You need some central control for flexibility, but that control inherently undermines trustlessness.
That's the paradox they're navigating. How much Web 3 purity are you willing to sacrifice for Web 2 adoption? And vice versa.
It's a very fine line they're walking. So maybe a final thought to leave our listeners with. Consider those long-term price predictions mentioned in the sources.
Yeah, some pretty bullish ones. What was it? 0.0807 by 2030. And potentially way up at 0.403 cents by 2041.
Exactly. Now ask yourself, how much do those optimistic long-term numbers depend on Zebec actually resolving this internal conflict?
Good question.
Which factor do you think will ultimately be more critical for their long-term value? Is it the appeal of the enterprise compliance, the streaming payments, the slick Web 2 integration, or is it proving they can deliver the ironclad, absolute trust that comes from a truly decentralized, genuinely immutable system?
Are they building the next fintech giant that uses crypto rails? Or are they building a core piece of decentralized infrastructure? The market might value those two things very differently.
Which bet are they actually making? Something for you to think about.
Definitely food for thought.
Thanks for joining us for this deep dive into the complex world of Zebec Network. We'll catch you on the next one.